Hello, everyone. Welcome to Trading with Livevol. My name is Stephen Choi, and basically, this is where I trade my Reg T account, a real Reg T account, and you guys can follow me how I use Livevol X to trade. So let's just go to my account. Looks like I'm pretty flat today. Last Friday, I kind of mentioned I have a kind of a position that I like, which is positive theta and positive gamma. I'm good. Hold on. I always do it every week. This week I started on Monday, so I'm hoping I won't have to do it for the rest of the week, but well, we'll see. So yeah, so basically what I have here is a position that I kind of want to have, which is I collect data every day, but then because I'm buying low vol and selling high vol, my gamma is net positive, right? So I know sometimes people say, hey, if you generate ideas, I know I use this thing a lot with the watch list. But I do look at our scans as well. They're very useful. Let me actually just go to one of them because today I saw something pretty interesting. So I do scan it, but usually like nothing big comes up that doesn't come up on the watch list. But you know, let's actually look at the positive net deltas. So positive net deltas is basically all the trades combined. You add them up, and you add up all the trades that happen on the bid and the ask, and basically you attach the delta to it. So basically on this one, on the stats tab, let me actually go to VIX. As you can see, almost 1 million calls traded to 200,000 puts, and if you add up all the trades that happen on the bid and ask, so if people bought on the ask, that's getting you long delta on the calls. If people are selling you on the bid on the calls, that's getting you short delta, and it's vice versa for the put. So if somebody is selling puts on the bid, that's getting you long delta. If people are buying puts on the offer, that's getting you short delta. And what we do is we actually sum it and put it right here, and then you have the net deltas and the net premium. So one of the things on this one, the net deltas, is basically kind of giving you which way the order flow is going. So you see in VIX, basically people are kind of betting on the VIX going back up. And let me actually go to the chart. So you see how VIX has dropped down quite a bit, and I guess what people are betting is that it's going to go higher. One of the interesting thing I did see is I was comparing the IV30 versus the IV120. And it looks like every time it kind of crosses over, right, like this, it's basically pointing to a bottom. So the IV30 falls below the IV120, kind of like it's kind of a signal that for the next couple of weeks at least, the VIX is gonna be on the rise. So like you see, every time it's like narrows, there seems to be a little spike on the VIX. Now I'm not saying that it's narrowed yet, but maybe this is something that's you know, worthwhile keeping track of, because right now it's 6.59, and I think last time it popped, it got as close as 5 here, it looks like. Here it got 5. Over here it was actually inverted by 11 points. So definitely if it's inverted, it does seem like there's some chance of it moving up. So for now, just keep track of that. If you look at the options order flow, it's very bullish. So you look at it and people are buying calls. One thing that you guys have to remember though, you're not really on these different months, it depends on different futures, right? So if you look at the Mays even, so the ones that are expiring May 21st, right? If you look at the put call parity, so if you add up the calls, so let's say the calls are worth 80 and the puts are worth 20, right? If you add them up, that basically it's 60 cents. If you're looking forward, the VIX is trading 1360. So I'm sorry. So basically by May 21st, because this is European exercise, it's not like you can exercise early. It's basically telling you that by May expiration, currently the fair value of VIX is not 1230, but it's actually more around 1360, right? That's why these puts, some people call me and say, hey, Stefan, what's with these May puts, right? Because they're only worth 20 cents. They're already 70 cents in the money, but what you don't know is that you can't just buy them and then exercise these, right? It's European. So what you have to do is you have to hold them to expiration. And what this is saying is even though VIX currently is at 12.3, by May expiration, people expect it to be 1360 is basically 50 delta, right? So just wanted you guys to know, it was just an interesting note, but people are starting to pile in on the upside. Now this ratio, just so you guys know, it's not something that unusual for the VIX. There's always more call activities than put. So I wouldn't just say, oh my God, it's like 1 million to 200,000. It's definitely the VIX is going up. That's not true. A lot of times people just use this to hedge. But what was interesting was that IW and QQQ are on this list, right? So if I type in QQQ, right here, basically more puts traded in QQQ, but as you can see, most of them is selling puts. And then in IWM, also most of it is selling puts. So I'm not sure if people are necessarily thinking these stocks are going to go up as much as they won't go down for the next maybe couple of weeks, right? So you can actually take this and say, hey, look, they're selling puts, right, in IWM QQQ, which are kind of like the sectors that got most beaten up. Today, on CNBC, they were talking about most of the time about how every time there's been this gap between the small cap and the large cap, that the small cap has done better the following 3 months. I guess that's statistically true, and maybe this is some of the betting that that people are doing against it, right? So that's one. So that was pretty interesting, right? So people are buying VIX calls, but yet they're also getting long QQQs, and also the premium on all this. So everyone is buying premium on both of them net-wise. Now that doesn't mean that just necessary, just going long, but it was interesting that the net delta is positive and the net premium is positive in all three of them. Yeah, the other one was net premium, so I want to show that. So net premium basically means when people are buying both on the calls and the puts, right? So let me go to the stats on SPY. So if people are buying calls and buying puts, right? So on the bid, so if they're selling here, on the bid on the calls, on the bid on the puts, basically that's net premium is negative, and people are buying on the offer, both calls and puts, net premium is positive. So it almost seems like people are expecting SPY to move, maybe not exactly clear where, when. As you can see, there's 2-to-1 puts, and basically they're betting negative delta. But you can see the other stocks that are on this list as well. Let me actually go to them. IWM, which we saw. Right, but Apple as well. Well, yep. So there's Apple net premium positive and net delta positive. If you look at the May volatility, see how it's just getting crushed. If you look at the 5 days, they kind of move in. They have a strong correlation, right? So basically, it's moving against. So sometimes what people do is they look at this tick chart to kind of see where this is going to go intraday, because it should have it should be negatively correlated between those two lines. Let's look at Facebook. Also heavily calls versus puts. Looks like this 2 cents looks like, I don't know, probably to covering or something like that. But also again, 2-to-1 calls to puts. More calls are being bought on the ask, and 34% of them are 5% out of the money. So it looks like there's some positive let me actually make this smaller. Yeah, so there's definitely some positive movement, and looks like most likely it's gonna reach an all-time high of 190 for SPY, but 1900 for the SPX. So it looks like this is almost like certain it's gonna reach 1900. But then we'll see what happens, right? So it's pretty interesting. I think the Ukrainian saga is not over yet, which is why I didn't do too much, placing of any bets, because this looked the chart looked bullish, but I thought the upside was around 1900. So the upside compared to the downside, something crazy were to happen, didn't seem that good, even though my thinking was the percentages was higher, they'll go up. Some of the trades, I want to kind of show you guys this trade. So in IWM, I was at Silicon Valley Options Group, and I did this test, and I did this in my other blog, video blog. So if you guys haven't seen it, go see that one. But basically, what I did was I sold a put at the money put every time the IV30 and the IV120 spread went above 50 points, and in the last 5 times that happened, basically those puts turned out to be 0, so you made an average of 217. If you actually just sold a put every month, 30 days out, you would have made 1305, 116 out of 22 times, and would have made 60 cents, right? This was I was kind of interested in this one, because this got triggered on April 14th, selling at 1306. So April 17, this week 11 put. If, let's see what they are. Because it looked like it was going to break the streak, right? So these are 50 at 51 right now. So if they go to 0, then basically it's that again. Let me actually go to 30 and 120. The curious thing about this one was that it actually triggered one the other day. So I was just doing this as a test. So on this date, 5/8, 5/8, it would be the June 6 puts, June 9 puts, let's say 250. So the June 06 9 puts, and this, when do we do this? This was on May 8th. So one of them could be May 8th, 2014. We're doing the June 06, 14, 109 puts, and the price was 250. And this one currently is like 0.5. So we'll keep track of it. It was pretty interesting. I wonder what the spread was. I guess I need to put that in there. 0.54. Right, so that's you know, I did it for the group just to show that even if you're doing credit spreads, because a lot of the traders do credit spreads, was successful. I wanted people to know that even when you're doing credit spread, volatility was an important factor. So one of the things I did, just to illustrate an example, and this wasn't so you go out and try, I'm not trying to say this is a strategy you should use, but I use some simple, straightforward strategy that can tell you guys that using volatility is an important component of trading options, even when you're doing credit spreads, right? So like every time you saw this spread, let me see if I can illustrate a little bit better. So every time this spread right here between the 30 and 120 went above 50 points, I basically sold an at-the-money put. So that is basically saying that the short-term volatility in IWM exceeded the IW120 volatility, and basically every time it triggered that, it was it almost kind of went in sync with the bottoming of the IWM ETF itself, right? So basically every time the 30 crossed 120, it was basically saying that was close or at the bottom of IWM, and that's happened like, you know, almost 2 times, almost 3 times in the past week, right? So you see how that's only 0.16, so it didn't reach the half a point. So if you are actually doing credit spreads, it might actually be more profitable instead of just doing stuff just monthly, but making sure that you take some into consideration the volatility factor of your credit spreads. And when I was, you know, when people were doing the credit spreads, you should just kind of roll it from month to month. And I think people spend a lot of time perfecting that. But I think if you actually took some time and tested the volatility aspect of that spread, you probably are going to make more, provided you're correct. So to me, I would be comfortable using this strategy if this trend were to continue. So if IWM trend was to continue upwards, this would be an excellent strategy to do, because it's actually kind of pointing to an intermediate bottom, right? So even for people who are doing credit spreads, and I know a lot of times I generate ideas from looking at the order flow, but you can actually get a ton of information here in terms of volatility, and you can actually trade volatility and have that be part of the variable that you use when you're making trading decisions, and I think your return will be higher. All right, moving on. Bank of America. So looks like there's some bullish order flow in B of A. This is in the morning, but then now I see this. If it's a buy ride, maybe they're buying puts in stock, right? So if anything, maybe that means it's you know, they want to buy a 15 straddle. So maybe the vol's too cheap. But you know, for now, if I look at the 1 year, yeah, it's not too bad. Looks like it's a bottom 19th percentile. I want to show it because it seemed kind of bullish, but now it's not as bullish because of those put spreads or puts that came out. Twitter too looks pretty bullish in Twitter. Calls to puts, decent amount of calls. It's very similar to Facebook. I guess in Twitter and all these stocks, guess the question is, do you sell the rally, right? Because you know, do you think it's the selling is overdone and it's over, or let me actually punch that up. Right, so you know, basically you're kind of waiting for this stock to maybe even get to somewhere here, maybe the $37 range, and fill this gap. But who knows? It might not even make it there. It might actually sell off right after, or it's actually bottomed and now it's going to go up. If I had to guess, it would be I would sell the bounce here, but in the end, I'm not as comfortable right now putting any bet on because it's like right in between, right? So that's about it. I know I was thinking, looking at that, I was thinking of doing some IWM 1x2. I was thinking of that last time, like the 104.90. But let's see, May, June, July. Yeah, maybe I can do some of this. Maybe buy one of these and sell two of these by July. Let me see the risk chart. Right, so basically what this is saying, so you see how there's a little rise right here? So if you can see, I'm making money this whole time, and then by July I'm good until like 96 bucks, right? So if nothing happens, I'll make money because I'm actually doing the 1x2 for credit. So I'll make money if IWM finishes higher than $96, but then I have this steep decline right afterwards, right? So I'm kind of messing around with it still. I did it because of that test I did when I was looking at the chart, intermediate bottom, but I didn't want to take any chances of selling something here. Maybe doing something down here might be better. But I think it's interesting, and you know, this way it's kind of what I was trying to pick at was a 200-day moving average as my backstop for IWM. So you know, I'm buying a 20 delta option and I'm selling two 10 delta option, and basically I'm doing it for credit. And if IWM finishes between 104 and 96, I actually make more than the premium that I just received. The only drawback here is it's a $112 stock, and I don't know what the margin would be. So I expect it to be pretty high. So I'm not thinking it's that great as a Reg T person. But other than that, that's about it. I'll be on shortly for the earnings report, and as I do more trades, I'll let you know. Right now, I'm kind of in a comfortable spot right now, just because my viewpoint on the market was pretty neutral, right? So the fact that I'm collecting money every day is a pretty good sign. So if I can design something where my data is continuously being positive and my gamma is positive, it's probably a good deal for me. So right now I'm just kind of letting it hang in there. Most of my up and down is less than 250 bucks, so it's not that big a deal. So I'm just gonna let it go, and knowing that I'm collecting money every day that goes by. And then when I feel like something's gonna happen to the market, or I see some good trade, I'll start trading again. But right now I don't see any of that. So hopefully this helps, and hopefully your trading goes well. And I'll be back shortly with the earnings report. Take care.